Interest rates have fallen by 0.25% recently. Are they likely to fall any further? And what does all this interest rates falling mean for property investors? That's what we're going to talk about in today's Property Answers. And I'm joined as usual by John Howard. How are you doing, John?
I'm doing very well, but I don't want to depress you. You didn't mention they might go back up.
Well,
so we've got to talk about that as well.
We could do, but I think the direction of travel... Let's talk about the direction of travel.
Okay,
the direction of
first,
travel,
and then we can talk about why it might change, I think. Because, okay, so
do you think there's any momentum to go up? When the ECB and Fed, it seems to be a downward momentum.
Well, most of that lot don't know what they're talking about. So you've got the Bank of England are clueless. But let's talk about how we got to where we are now, because I think that's quite important.
Of course.
So we've had the general election. No one messes around with interest rates during that general election period, because that'll be unfair to whoever's trying to get into government so on. However, I thought there would be a drop for the last month or two. I thought when everything settled there would be a drop. Then I thought, wrongly, in the last 2 or 3 weeks up to the Bank of England making their decision, like a lot of commentators, I didn't think there would be, because I didn't think things were really probably good enough to. I think there was a bit of inflation rate jumped up a tiny bit from where it was and all the rest of it, and I was concerned that they wouldn't bring it down, but they have done, which is great news. And of course the mortgage markets had already what we call priced it in, hadn't they? They'd already they've all anticipated that might happen. And they've anticipated potentially there could be another drop as well before Christmas. Some people are talking about 2 drops for Christmas, but they're only going to be 0.25% each, probably.
It's not the number of drops; it's the amount of the drops. I mean, the Fed in the US has done 0.5%. They're likely to, and they've indicated they're going to do another 0.5%.
Yes. Well, they've done it too late, haven't they?
They've got some serious jobs data, and they're trying to have a recession over there.
Yes.
And if they,
they've got an election coming in November, so they won't do it around November. So that's what you got to remember. It's all property, politics, and business. They're all so closely related,
and they're also global these days.
Absolutely.
And I think that's the thing that people miss sometimes. And what happens in the US plays a big part in what happens in the UK in terms of interest rates. We haven't really talked about this, but I think that the election in the US will have more impact on us than any election I've ever known in my lifetime.
And potentially interest rates,
and potentially interest rate, because Kamala Harris is even more left than our lot. Yeah. And I think if she gets in, she's talking about 46% capital gains. Yeah. She's talking about 28% corporation tax, which these are all higher than we have. Yeah. Yeah. She's also talking about a ludicrous thing, which is unrealized capital gains. Yeah. Which is madness.
Even this lot here hadn't thought about that one.
Exactly.
Well, they have now, because they'll copy it probably.
And then she's talking about price fixing on groceries and all of that. So if she gets in, and she's going that far to the left.
See, that's why
it gives this guy's license to do more.
Excuses, and that's why I'm not convinced it may creep back up again at some point. Now, it's all about sentiment, in my view. A 0.25 drop, to be quite honest, to my life, has made no difference at all. I borrow millions and millions of pounds, so it might mean, if it's not fixed, that is, a tiny difference to me. So in reality, it doesn't make any difference to you, Ranja, and me, or any other investor. But it's the sentiment is what we're talking about, because it makes people feel positive that things are going down in terms of interest rates, and and property prices. Interest rates go down, property prices start going up, and you might have seen the last month figures. Actually, that is the best increase for the last 4 years or something in property prices. Now, I never quite believe all that business and Rightmove and all these other lot, but that's what they're saying. So, yes, there may well be another 0.25% drop at some point. There could be 2 drops potentially, but then you've got an issue, I think, going forward with inflation.
Well, that is the elephant in the room. It's over the 2% mark with all the public sector giveaways they've done. Is it likely to ever get to 2%? Do they need to revise the inflation target and say, look, it's 3%, and then follow the Fed and all of that?
I expect they will definitely change the target at some point.
Move the goalposts.
They'll move the goalposts because that's the easiest thing to do, and then they can say they're within the target. I don't think 3% will be in the target. I can see inflation going back up again. I know I'm not an economist, and I know people that are. So, wages are not the only driver with this. There are other things that drive inflation apart from wages. But when you consider that the civil service is so large, if you include NHS and everyone who works in the government, they're all going to want these damn pay rises. And if one section gets it, the rest will want the same. It's a massive problem for the government, a massive problem.
I think the other people have got to kind of really discount the Tony Blair government, because that wasn't really Labour.
They were more conservative in many ways than the Conservatives were at the end. Yeah.
But if you look at all normal Labour governments, which are socialists, they have similar traits in that inflation does run high under those sort of socialist regimes.
It does, but the one thing in the past is no property person has done that badly out of a Labour government, and the reason for that is inflation.
Yes.
But of course,
as long as you can pay your debt.
As long as you can pay your debt. That's the issue. That is the issue. And I don't think we can be as confident as some people are being, and some commentators are being, until you know who is in government in America. And I think you're absolutely right, Ranjan, and I don't always agree with you, but on this I do. I really think that interest rates could go back up quite easily. I wouldn't trust this Bank of England. I wouldn't trust any of the advisors, all this IMF and all the other lot. All their predictions have been wrong basically over the last 5-10 years. So I don't think anyone's got any confidence in them whatsoever. And I think potentially we could have a rate increase sometime next year.
More likely if there's a Harris government in the US, and
yes, maybe, but I think this inflation could get out of hand, because you've got to remember that a Labour government are controlled to a point by the trade unions, and the reason they hung on for all these strikes and everything else was they hung on until Labour were in, because they knew as soon as Labour were in, they'd have a deal at a bit less than they wanted, but which is exactly what they've all done. But of course, the ones who did a deal earlier are now piping up again, saying, "Oh well, we want even more next year." So it's going to be an ongoing issue every year, and it isn't going away. And actually, you look at food inflation and things like that. I stopped on the way here at the services. What I paid for a coffee, a bacon sandwich and something else was what I paid probably 3 years ago for a meal on my own. It was just ridiculous. So costs are just going up everywhere still, whatever they might say.
Well, we all know the inflation. There are two ways of achieving the inflation target: either move the goalposts and fiddle the inflation rate.
I think they'll definitely do both.
Massage the basket they constantly do.
Absolutely. Well, I think they'll have to do both. But clearly, there are deals about to do, aren't there, on fixed rate mortgages? But I would say you've got to be very careful with them.
I think. We'll come on to. I know what you're coming on to, but we'll come on to that in a moment. But I think the fixed rate mortgage deals that are out there at the moment, I don't think they've priced in the effects of higher inflation, socialist policies, and what happens over the pond. Yeah. They have just gone on the trajectory that we're on now,
on a downward spiral.
Exactly. Yeah. So from that point of view, it's not a bad thing. To consider fixing mortgage rates now on buy-to-let properties. Obviously you'd have to look at your own figures and all of that.
Well, I'm under a bit of pressure there, because Mrs. Howard said to me, with her buy-to-let she's got, shall I fix for 2 or 5 years? I said, I don't know, darling. I haven't got a clue. Well, you should know. You've written books and done da-da-da. I got the whole,
Punch them into a spreadsheet and let the spreadsheet tell you.
Yeah, I got the whole. He said, well, I can do 2 or 5 years. Well, now, West, which shall I do? I said, well, how much are they charging you, percentage-wise, up front to do the 2 year? Because if you add that up, So if it's £5,000 up front or something silly, a percentage of the loan to have the money cheaper, you've got to add that onto, haven't you? You've got to add it all up.
Yes.
And then divide it by the amount of months and see, actually, you're not paying £480, you're paying 620 quid, or you're paying £840. So a lot of these low interest rates are to get you on the phone or get you onto the computer to suck you in, aren't they? And you must see a lot of that with all your Baker Street followers and everybody else, that so many people looking to refinance, and it sounds great. I mean, I had someone the other day say, I've got a rate of 3.9%. Oh, that's fantastic. But what's the upfront fee?
That's the problem. There's a lot of fees. And I think the other thing, I mean, something you
I
said
went for
earlier,
5 years, by the way, with Mrs. Howard, on the basis that I might be married to her for a further 5 years rather than 2. But I could be wrong there. That might all go the wrong way for me.
Well, we'll find out.
We'll find out in the future episodes. How it goes.
So stay tuned.
And by the way, Nat West wanted to know how much she spends on her hair a month, her overheads. I mean, goodness knows you don't want to know Mrs. Howard's overheads. So I'm not sure she told them the truth. But what I'm saying, I mean, the information they want for, and the loan is 30% loan to value or something bonkers on these two houses, is just bonkers what they want.
That is
crazy.
Yeah.
Crazy.
The information requirement it has gone up,
crazy.
And it's also on the property and the lettings and making sure that everything, all the conformance is there.
This was on an existing loan. They already got it. I mean, you can't believe what they wanted.
One thing I wanted to pick you up on what you said earlier about the effect of the cut in interest rates. I kind of agree with you to a point for the properties that you have in your portfolio.
Yeah.
But one area of impact, positive impact, is when you're selling. A lot of people, with all the changes going on, are looking at their portfolio and perhaps selling 2 or 3 properties here and there that don't fit.
And tidying things up a bit.
Tidying things up.
Yeah.
And that it's not a bad time.
No.
Because owner-occupier mortgages don't suffer from the high arrangement fees that buy-to-let do.
No,
They're generally cheaper than buy-to-let rates.
Yes.
And the fact that they've fallen by 0.25% and the market at the moment is anticipating further falls means that the affordability in the owner-occupier market is more than it was, say, 6 months ago. Which is not a bad thing if you're selling first-time buyer, second-time buyer housing stock in decent areas.
I don't want to depress you.
Go on.
Now, you're slightly older than me. But in the old days, a first-time buyer could borrow 3 times the first income, and the second, if they're a couple, and the second income would be 1 times. That's what they could get. Now they can borrow 6 times the first income, and I think it's 3 times the second, or whatever it might even be more than that. It's a massive difference, isn't it? Massive difference.
No one would be able to buy anything if that wasn't the case.
There you go. And of course, what they're saying is, and to be fair, Michael Gove came up with this one on the basis that if they can afford a rent that is more than the mortgage will be at 8 times, why can't they borrow 8 times? I mean, my argument against that is that's okay if that loan is fixed for the term of 25 years.
Yes.
But of course, it's only ever fixed for 2 or 5 years. It might be 7, but I mean, I fixed, to be fair, part of my residential portfolio for 15 years. But that's pretty unusual, to be fair.
Hang on, we're mixing things here.
Yeah,
I know we're talking buy-to-lets, but in the owner-occupier market,
yes,
it's far more resilient than before.
Much more resilient. I agree.
Repayment and there's higher.
Yeah, and of course, people, a lot of people believe what the Bank of England say, and interest rates have come down a bit, they're on the way down, and it gives people confidence to buy, and that's a good thing for the property industry as a whole. House builders now house builders now are starting to see the order books fill up, and remember the big top 10 house builders don't build houses if they haven't got an order book.
Yes.
So that is improving. Do you want me to make a prediction on these interest rates before we finish?
Why not?
I predict next year at some point the interest rates will go back up a bit. Not a lot, but they'll go. It will reverse. That's my prediction.
Wow.
What do you think of that? You'll disagree, of course.
No,
just to be spiteful, you'll disagree.
No, I
won't
will
you?
not disagree.
Oh.
I will just say I don't know. Because I think...
Well, that's sitting on the fence, man.
No, it's not sitting on the fence.
Of course it is. They're sitting on the fence, man.
Because
it's a yes or no. What is it? Or stay the same. There you go.
I think
stay the same, you'll say.
I think it depends on a lot right now. It depends on a huge amount. There's so many variables and international variables, and the fact that we're out of sync with the Fed.
Do you know the difference between you and me? Do you know the difference between you and me?
Go on.
Apart from good looks and so on.
Well, thank you. It's nice of you to say.
The difference between you and me is I see black and white. You see black, grey and white. That's the difference. And that's the difference between me...
Well, we're in a non-binary world now.
Well, we might be. But that's the difference between me being predominantly an investor and property developer and a lot of people who are property investors. I think that actually, and I know you do some development, so I'm not saying you don't, but not on the same scale as I would. I do less investment than you do. So, but I see that is the difference. And that's very interesting. Very, very interesting. It says it all, Ranjan.
I'm not exactly sure what you mean by that, but I do think that we can't, no matter
what...
I
see it yes or no. You say yes, maybe, or no.
We think the Bank of England has
dreadful track record.
They have a dreadful track record, but we think they kind of rule the roost on this. But they have a remit which is very blunt instrument, which is 2% inflation.
Yeah. That's going to change.
But the fact of the matter is, they can't. It doesn't matter what control they think they have, and all these voting they do on the day.
Yeah.
They can't be too out of sync with the US, because that has massive effects on us.
I agree.
So for that was the only reason, because now we are out of sync with the US, and there's no sign of that we're going to be in sync. I think that's why I'm sitting on the fence on this one, because there's things happening outside of the UK that's going to affect this.
Interest rates will go up slightly next year.
Okay.
Not massively, slightly.
Okay. And but you know what? We've given two predictions here, but I guarantee... Well,
I've given a prediction. He hasn't.
No, I have. And I'm also saying one thing. My prediction's right, which is I don't know.
Sit on the fence?
No, I don't know.
That's not a prediction,
Ranjan. No, my prediction is I don't know.
That's not a prediction. That's not a prediction.
I can guarantity my prediction.
I could say that on anything. You could go around a property, to property development, to develop a big property and go, well, maybe I'll buy it, maybe I won't. No, you're either buying it or you're not buying it.
So what do you guys think about interest rates? Do you think, the markets are saying they're down, they're going to go down. That's what they're priced in. Do you agree? Do you disagree? Let us know in the comments below. If there's anything you want us to cover on a future episode of Property Answers, let us know in the comments as well. That's it from John and I.
See you soon.
The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street, we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.